Hi, welcome back. Kush Bohra of kushbohra.com now joins in for some technical analysis. Hi, Kush. Morning. Thanks very much for joining in. First up, if you can share what's your strategy on the index now? Do you go further short? And what are the stocks you're looking at?
Sure. Hi, Smara. First up, thank you for having me on the show. Well, just to put things in context for the markets right now, as they say, the higher they go, the harder they fall, right? So if you look at, how the markets have performed in the last, month and a half, 2 months, the Friday fall and today's fall isn't really too alarming. What is also comforting is the fact that there is, a very decent FII, buying figure coming in, barring Thursday, where we saw a block deal. There was a buying figure all throughout for the last, 13, 14 sessions. So that's encouraging. Also, 17,500 put is where we've seen a very significant base, and 17,300 is where the 20 DMA comes for the Nifty. So we're trading close to the support. So this wouldn't be a prudent time to sort of go short on the markets. In fact, I'd look for buying opportunities for targets of 17,800 and 18,000. Just for now, I would want the slide to halt. Nifty to just take a cushion and then consider buying, but definitely no shorting at this level. Same for bank index. Bank Nifty has a put support at 38,500 and the 20 DM at 38,000. Again, fairly close to the support levels. So I'd look for long opportunities. But as I said, I want both the indices to settle first. Don't want to catch a falling knife. And once they do settle, we'll look for buying opportunities with these stop losses.
All right, you look for buying opportunities once the market does settle a little bit. But Kush, take us through some individual stocks that you would look at right now.
For sure. Couple of stocks, and these are two stocks which have been sort of very agnostic to the market move, be it up or down. They've just continued their trajectory of an up move. The first one is RBA, Restaurant Brand Asia. I've discussed this stock a couple of times on the show, on the channel, and the stock's seen a pretty secular run from 85-90 levels. For the last couple of sessions, the stock has crossed its 200-day moving average. It's trading above that, which is now a very encouraging sign. And as I said, it's not been affected by the blips and the falls in the market. So I expect this stock to move to 140 levels, and 125 is where you can place your stop loss. The second stock is Hoodco, relatively smaller ticket size, but the movement's been very similar to RBA. It's seen a one-way rally. It's taken support around its 20-day moving average, not really broken that on a meaningful way. And it's also trading above its a 200-day moving average for the last 3 to 4 sessions. So Hoodco remains a buy. Here the target would be 40.5 on an immediate basis, and the stop loss will be 38.